thanks so much for joining. I'm going to give everybody a chance to ask you questions, but I'm going to kind of dive right into it. Could you just tell everyone a little bit about your background and what you've done in the past and what you're working on today?
Yeah, sounds good. So I've been an internet entrepreneur and investor since 2000. So I've been involved with a variety of companies as an entrepreneur. The first one was one of the first online advertising networks called Traffic Marketplace. I co-founded a site called Tag World, which was an early social networking site that we sold to Viacom. Took a company public in the UK where we were applying for new top level domains. I'm sure you've seen like .xyz or whatever.
Oh, you were one of those guys?
Yeah, I was doing that for a minute. It was fun. And then look, I've been involved in a variety of other entrepreneurial ventures. Kind of over time, it's moved more from me starting them and running them to me helping people who really needed assistance getting things off the ground. So almost like a quasi incubator type thing, but it's just me and maybe another other person. And then also, over the years, I've invested as an angel investor in over 150 companies. Have had some good wins. Got a decacorn in a company called Trade Desk. Had a bunch of companies sell in kind of the mid $100 million range, and have had a lot of good exits on that front. I've really been focusing much more on that recently.
And you also invested in AngelList, is that right?
Yeah, I invested in AngelList.
How did you invest in AngelList? Did you know them or?
No, it was funny because I had invested in a bunch of AngelList like syndicates, and AngelList was doing a round, and don't get me wrong, it's not like I got in at like 10 million or whatever. They were raising around at $100 million valuation. They were like, do certain people on the platform want to get involved? I was like, hell yeah, I want to get involved. Like, I think this is going to be like a big winner. So, and recently they raised money just for their investment platform at 4 billion. So that's awesome. But yeah, it was just,
is that a 40?
Literally through a syndicate on AngelList. Yeah.
Wow. That's awesome.
Yeah.
And
but
so
yeah, I have a bunch in the pipeline that I think are doing really well. There's a company called Scopely that's a unicorn that'll be going public hopefully this year or next year. I'm on the board of a company called Crexy, which is a commercial real estate marketplace. They're raising around, I was on the board, and they're raising around right now at about a $500 million valuation. I helped get that company off the ground, help raise the first round of financing and whatnot. So right now I'm in Nashville now. I was in LA for 20 years, and I moved here with my family, with my wife and my 3 kids. And just been checking out the Nashville scene here for a while.
And give a plug for the law firm, which you're also doing some stuff with.
Yeah, so I do a lot of work with a firm called Reitler, Kalis and Rosenblatt, and they're just awesome guys, and they also have a fund. So I've been pushing them on companies that I work with, because it's one of those things. It's funny, they approached me through a mutual friend. They're like, hey, would you want to potentially do some consulting with us? And at first I was like, nah, that doesn't sound like what I want to be all about. But look, they're great, and honestly, they're like half the price of most of like the big guys out there. And so it's a good, and the other thing that's great, it's a great excuse for me to get back to LA and like invite all of my friends to drinks and dinners and like all these like fun events. So for me, it's just like, it's fun, and they're good guys too. So I enjoy that.
So I want to talk a little bit about, I know you've sat on both sides of the table, but how, from your perspective, entrepreneurs should meet and find investors. And what I find interesting, because the people on this call are from all around the world, and some are in tier 1 cities and some are not. But Nashville is definitely an up and coming city, but you've kind of left and obviously feel comfortable that you could still meet investors. So how do you think about this from the seat you're sitting in now on the best way for entrepreneurs to meet investors and create those relationships?
Yeah, I mean, it's two questions. I mean, the first one, I'll say, moving to Nashville reminds me a lot of where LA was at in like 2005. And that was a really good time to be investing in companies in LA. Maybe 2010. Let's give Nashville a little bit more credit. But yeah, it's like 2010 was when I invested in this company Scopely that's going to go public soon, and I think should be a $10 billion plus company. Things were coming up at that time. There were a lot of VCs that were starting to come into the mix. There were a lot of angel investors that were coming into the mix. There were a lot of entrepreneurs that were starting companies in Los Angeles. And I'm starting to feel that way about Nashville right now. And it's great. And there's a really cool community. We have a group that gets together, and it's been growing every single time we get together. And I feel really good about that. So I feel good about Nashville. The second part you were saying, raising money currently. Sorry?
And just meeting just how do entrepreneurs meet investors? How do they meet a guy like you?
Generally it's through a mutual contact, I mean, it's the same with you, right? It's like, how do people meet you?
Yeah.
Typically through a mutual contact. I think LinkedIn doesn't really work, because the problem, I always tell people that, if you're ever feeling lonely, put angel investor on your LinkedIn profile, because you'll never get any shortage of people hitting you up, but you can't possibly read or respond to all of them. Look, I think it's hard. I mean, you know how it is.
Yeah.
It's very, very hard. I think you need to figure out if you have any mutual contacts with people that you think could be good fits for you as an investor in your company. And if you don't, I think there are a lot of like what you're doing, man. I mean, I think a lot of people here or everyone here maybe is working with you. And I'd say that's a smart decision, right?
I didn't pay you to say that.
No, I know you didn't, but I think it's a smart decision, because if you don't have those relationships, I don't even know where you start. I was lucky enough to, when I was starting my first company, it was with my boss, right? And he was nice enough to kind of let me come in for a certain amount in that deal. But like, if you're just coming in cold and you're hitting up investors cold, that's a real hard road to tread.
What about, would you trust a referral from one of your portfolio founders? So if you've invested in a company before and
Sure.
So one advice which I've given before is, look at an investor's portfolio and then befriend the founder. It's not necessarily scalable to 100 investors, but then connect with the founder and then get the founder to make the intro versus
I think that can work. Yeah, sure. I think that makes sense. I haven't seen a lot of the companies that I've been helping out do that, but I think that's probably something we should be doing more of.
Absolutely. And so, look, I think one of the biggest questions everyone has is, how do you make investor decisions? And we're talking, pre-seed, seed, investment decisions. So what are you actually looking for?
It's going to be a cliche, but it's team and traction for me.
Yeah.
And traction is really hard if you don't have money, right? So I get it. Like it's really hard to have traction if you don't have any sort of capital to back that up. But I also increasingly have been focusing more on companies that are going through like incubators or accelerators. I think that that's a really, really good, I think it's a very positive thing that's been going on, because I think that there's a lot to be said for people who have done these things before, right?
Yeah.
Helping people out who have not done these things before, right? If you've done something before, if you've had a successful exit, it's not going to be that hard for you to raise money. If you haven't, it's going to be hard. It's going to be very, very hard. And I think that connecting yourself with an incubator or an accelerator or an individual, I mean, I do it as an individual, you know, to help raise money and help kind of like hone the pitch and how you're framing things. I think that can be very valuable, and I think it's a smart way to go.
So in terms of traction, and this Nadia just kind of asked a question, but I think a lot of times entrepreneurs like wrap around like a certain number, like, you know, it used to be like 1 million in ARR. If you had the 83,666, you're like, you can get funded for a seed. Like, is it tangible, or is it more like pornography? You know it when you see it. Like, how do you see it?
I think it's more like pornography.
Yeah.
I should have just said, you know it when you see it, but
Yeah.
look, I think but going back to what I was saying before, it's hard to get traction without money, right?
Yeah.
So, and I fully understand that. And I think that most investors understand that. So it's more of a positive if you're able to pull that off without having raised money. You know what I mean?
Yeah.
That's something that that goes a long way. But you know, it's not to say that you can't raise money without having had any sort of traction.
And that would then fall back on either the team or the accelerator. Is
Sure.
that kind of for you?
Yeah, I would think so. Right.
And talk to me a little bit about the team, like dig into the team a little bit more. Like, what are the attributes that you want to see? Or maybe you can use some examples of previous investments where you've really liked the team and what they had as far as attractiveness.
Yeah, I mean, look, I would just say passion is the number one thing. You can really pick up on that. You can really pick up on when people are really passionate about what they're doing. You can really pick up when people feel like they have an angle that is unique and interesting. And it's not hard to see. You know, when you see it, you see it. I'd say those two things.
I mean, that's super, interesting for me because I have lots of passion. I think, you know, that's.
Well, I would invest in you, so.
So, but is that, that's obviously something, I guess, in a lot of ways you either have or you don't. But you're saying you've gotten pretty good returns on like the Howard Schultz, like champions of coffee in his example, and others, the Mark Benioffs, where they've just been really excited about their company and had a new, different vision.
Yeah, and I think that combined with it coming from people that I really trusted. I'm thinking about the ones, look, the companies that I've invested in that have been the most successful, the number one company by far is Trade Desk. And it's a $30 billion company. I invested $100,000 at a $16 million valuation. Unfortunately, I do not still have my shares. Yeah, but look, it was a guy who had done it before. You know, he had a successful exit. He was very passionate about what he was doing with his next thing. And I also had the kind of like the go ahead from a very close friend of mine who brought the deal to me and just said, look, this is a no brainer. And my typical check size is 25 to 50K. So 100 is more for me. And I just saw this and I was just like this guy is no joke. I think he's really going to make this happen. And he's done it before.
Yeah.
And I'm going to bet more on this one. Right.
That's awesome. And what does Trade Desk do? Just out of curiosity.
It's an ad tech company. They just help companies like advertise more effectively online.
Which is obviously it's also a difficult company. Usually ad tech is to wrap your head around. So you really had to trust
believe me, I know all about this, having come from the world of ad tech. So,
okay.
Yeah.
So was that part of it too? Would you say you had that expertise where you could feel comfortable with it? Or would you think you would have done it also?
I think knowing what he had done in ad tech and me having been in ad tech and knowing what he had done in ad tech, it was easy enough for me to say, this guy is no joke. Like, I want to back this guy.
Yeah, that's awesome.
Without really knowing exactly like what that was going to look like.
And so, okay, so traction and team, what else, now kind of sitting on that other side of the table, what have you seen? Have you seen anything recently where you're like, wow, that was a really good either growth hack or some really good insight that you think could be instructive to help people grow when they don't have money?
That's an area where I don't have a whole lot of like expertise, honestly.
Yeah, and I was just, okay.
Perfectly blunt.
Yeah, no,
I think I need to know more people like who know what they're doing when it comes to that in terms of like growth hacking and whatnot. It's not my area of expertise.
Okay. So is there anything where you've seen, or like what's some conventional wisdom that you feel where you just read it consistently or you hear it and you're like, that's just wrong and I just don't agree with it? And like
focusing only on a small number of firms and deciding I want to be with this one of these three firms and going after them. I think that's stupid. I think that raising money is a numbers game. I'd say that's one for sure.
So basically you would almost, sometimes you read like, find the 8 investors you really want and hyper focus on those 8. You're saying you would disagree with that?
I disagree with that because I think you should give yourself as many opportunities as you possibly can to find investors. And who knows, like those 3 may not be interested in what you're doing. So I mean, you don't want to go wide and you want to go wide. You don't want to go out necessarily to people that, look, if you're a B2B SaaS company, you don't want to go out to companies that are looking at like consumer internet plays exclusively, right?
Sure.
You don't want to go out wide like that, but to the extent that you can go out wide, go out wide. It's like, I think it's a numbers game. I've always played it like a numbers game. I've been surprised over the years at the firms that have backed me. If you told me at the beginning with a lot of these companies that this firm would invest in this company, more often than not, I'd say more than 50% of the time, I would have told you probably not. So that kind of tells you, you may want to go wider than you think. As long as you have a good in, I wouldn't go blind. Don't go through LinkedIn. If you have, I mean, this well enough. So.
Yeah. I mean, so certainly like randomly emailing people is not the answer, but I think going after a lot gives you the greatest opportunity to get funded. I think
so. You know what? I also think angel list syndicates are really good. I've been very pleasantly surprised at how well those work. And how many there are, and how many of them are willing to take a crack at a new company.
What about crowdfunding? You have any opinions one way or the other, like on WeFunder or anything like that, or like community-based campaigns?
I haven't personally done it, so it's hard for me to say one way or the other, but if you've seen it work, great, go for it.
What are some deals where you've walked? Is there anything where, a lot of times you get, advice from lawyers, advice from founders and saying, don't do this because it's going to screw up your fundraising round. Like, what's the reality there? Have you walked from deals because paperwork wasn't right? Or what would be a reason that you would do some DD and be like, I can't fund this company?
I haven't personally experienced this, but if there's something crazy in there where, and I've heard that this is the case with some accelerators where the cap table gets flooded, like once you raise a certain amount of money.
Yeah.
I mean, that wouldn't necessarily make me not do anything, but it would make me think twice. I haven't really, shockingly enough, like having done like 150 plus like deals, I haven't really gotten screwed today, knock on
But
wood.
does that also tell you that some of that cautions are a little overblown and you should
I
do
think
it
so.
to keep your company alive and not worry so much about what's going to not get you funded 2 rounds from now? Because you've done 150 rounds and it sounds like you haven't really run into a whole lot of issues and you've seen a lot.
Yeah, more often than not, there's just nothing in these deals that is anything that I would want to say like, hey, you should change this. It's very rare.
Yeah, I think that's super interesting. I wasn't expecting you to say you've never had one, but like I was expecting you to validate.
I have not gotten screwed over yet. Again, like knock on wood, but we'll see. And I think that the other thing is too, some of it is I like to look and see what lawyers these companies are working with. And if they're working with certain lawyers, that they're not going to be pulling any sort of bullshit,
And that typically means a lawyer that's not like a divorce lawyer, one that has worked in the startup space. Like there's like 7 or 8 of them, but
no, you got Cooley, Reitler, you got, there's a bunch of others that are legit firms that are not going to put, they will refuse to put crazy shit in there. And especially because I know most of the head guys at these firms at this point, just because I've been on the other side of the table, and they're not going to try to slip something by me at this point. And if they did, then I'd be telling everyone and their cousin about it. But
yeah. So other than focus on traction, focus on team, go wide, what other advice would you give somebody that was looking to raise capital?
I swear to God, guys, he did not tell me to say this, but I'd say work with someone like you. Like, honestly, this is something that I think increasingly is very, very important if you're doing it for the first time, because otherwise you're going to be running around like a chicken with your head cut off, like trying to figure out how to raise money, and it's really hard. I think that hooking up with a good accelerator incubator is a really good way to go. I would also say that don't focus too much on valuation. Don't get your head around thinking, oh, I have to be at 8, I have to be at 10. You know what? I raised around, you guys will laugh at me. I raised around at 2, okay? Back in 2010. because I just wanted to raise it in one day. And by the way, was it kind of dumb? Yeah, kind of. But you know what? It ended up working out really well at the end of the day. I would not worry so much about like what that initial valuation is, because what you really want to focus on is getting that money in the door and get to work, right? And you know what? At the end of the day, if things start going really, really well and you feel like you have too little of your company, you can always go back to the board and say, hey, look, I have too little of the company. I'm on the board of a company where this happened. And the CEO said, I have too little of this company and I need more. And here's what I think I should have. And we gave it to him. Because he deserved it, because he took this company from nothing to something very substantial. So I would worry about just getting the money in. Don't worry about like what the valuation is. Just get that round done, get going, get to work, and then move on.
Yeah, I talk about not trying to over optimize your early valuation, because it's like, even when you invest,
it doesn't matter.
Especially if you're going to be a decacorn or a unicorn, like either way, the increase is going to be huge for you as a founder.
Well, and again, you have so much influence at that point too, where you can actually get more equity later on.
Yeah.
And your board will give it to you.
Yeah, I agree with that. And what has been the times where, obviously if someone doesn't have the traction you're looking for and doesn't have the team, but how important to you is just the chemistry in the relationship that you have with the CEO and the founding team?
It matters a lot. I mean, if I have no chemistry, then it's a no,
And so,
yeah, I know that was a very quick answer, but I mean,
no, it's a great answer. And it's something that we spend time talking about. Is the object of a meeting with an investor is to not get a check. It's to get to the next meeting and to establish a relationship. And eventually, when to lean in and hand them the pen. And so how do you establish that relationship with the founder? I know that's maybe a vague question, but like, how do you think about it in terms of like, I want to have a relationship with this founder and, really get to know him or her? Like, how do you do that?
Quite frankly, I kind of leave it to them, because I kind of feel like it's more on them than it is on me.
Sure.
It's on them to kind of establish that relationship. I mean, not that I'm just going to be sitting back and I'm not going to be an asshole to people, but like, I mean, at the end of the day, it's kind of on them to try to establish that relationship and that rapport.
Can you think of any instructive examples on how it's went very well, where you're like, well, he's done a really good job, or like, I like this guy, where you think it could be instructive?
Yeah, with a guy named Mike DeGiorgio, who's the CEO of Crexy, which is the company I've referred to multiple times in this whole thing. He did a really good job at both expressing the fact that he knew what he was doing without being ultra arrogant, but also saying, I need what you have, or could use what you have to help me take this thing to the next level. I felt like that was a good thing. Him just expressing he was expressing confidence, and at the same time saying, I could use what you have. You know what I mean?
Yeah, it's almost like he wanted you along for the ride. He didn't just want your capital. He wanted he wanted you as a teammate.
Yeah. And he's done exceptionally well. I mean, he's just a rock star. So it's been fun to watch that happen.
Would you characterize that like a founder taking coaching from you is vital to your investment? Like, is it fair to say you wouldn't invest in a company if a founder said, I know everything, I don't need any of your help, just give me your money?
No, not at all. Actually, there are plenty where if actually I'm looking at one right now where they haven't said this to me, but I know they don't need my help.
Yeah.
where I definitely would like to invest because I've seen them do what they do before and
Yeah.
they know what they're doing. So
it's not vital to you that they're coachable, but it is a tactic where if they are receptive to your feedback and want you involved, it's a manner to get you connected.
yeah, look, it's very easy for me to invest in companies where it's someone who's a successful serial founder. You know what I mean?
Sure.
If you're talking about a company that's a first time founder, I'm probably going to want to get more involved more often than not. If that individual wants me to get involved, and if I want to get involved based on what I think the odds are of that thing succeeding.
Sure. And so it's almost on just kind of going back to the relationship. It's almost based on the founder to establish that relationship with you as an investor. Would you agree
Yeah, I'd
with
say
that?
so. Yeah.
Beyond the board meetings. So what would you recommend? Okay, now that you got funding, how would you how have you seen that relationship between the investor and the founder be optimized? Like what tips would you have from there?
Just to keep me in the loop. I mean, just me personally, I'm not the type who then gets hands-on.
Yeah.
So for me, it's more about just making sure that I'm hearing what's going on. Now, there are other people who do what I do, who immediately jump in and they're hands-on in terms of operations and whatnot. That's not me. It's not my skill set.
Yeah.
So it's more about just kind of making sure that I'm in the loop and I can be in a position to help out where I can help out.
And what about when things go wrong? I mean, that's obviously why you want to be in the loop, but what advice do you have about bad news?
Well, you want to hear it immediately, right?
You don't want to read about it in TechCrunch.
Yeah, you want to hear about it immediately because you want to help.
Yeah.
So of course you want to hear about bad news. I mean, if you don't want to have bad news, but if there is bad news, you want to hear about it ASAP. And a huge red flag is if you're not getting bad news when bad news is happening. Any company I've been involved with where that's happened, and I can think of one or two where the bad news was not immediately reported to people, those are ones that went under.
That's a really big issue just in general. Okay, so we got a few minutes left. I'd love for you guys to ask Clark some questions yourselves, and feel free. It'll be a little awkward for a second until someone gets the guts to go first.
I'm not ready to start. Hey, Clark, Scott from D3 Golf. So what are you investing in now, or what are you looking for without people coming at you? What are you looking for?
So I'll tell you, the funny thing is I've slowed down quite a lot right now. And that's because doing what I do. So I'm not a VC. Like I just invest off of my own balance sheet. And so what happens is like, you have your amount of capital, right? And you invest it. And then you hit that point where your wife yells at you and says, you need to stop investing in startups because like we're going to go bust. So, you have to wait for some wins to happen. So I'm kind of at that point right now where I've slowed down quite a bit. I'm still doing some deals here and there, but what am I looking for in particular? There's nothing really. I mean, I love just having an open mind and just seeing what comes to me. And something came to me today. It was a bunch of guys who are just trained killers, who I would invest in them doing anything. And so I'm going to invest in what they're doing. so something like that, like, even though I've slowed my roll a little bit right now, I'm definitely going to invest in that. There's no particular sector, no particular space. Yeah, sorry if that's not that helpful.
No, I mean, I think it's honest.
Yeah,
So it
yeah.
sounds like you're very opportunistic, and it very much is the team and the traction or the accelerator that you have faith in, and then
Right.
being able to establish a relationship with you.
Sure. Yep.
Fair enough.
Yeah, thanks.
Yeah. Sure, Scott.
And when you say train killers, is that based on, their previous lives and just their resumes?
Yep.
So,
And they already have funding from like a big legit fund. And it's kind of like, I know them.
yeah,
We were actually, me and these guys were talking about doing a SPAC together for a while.
yeah,
And then we decided not to do it. And it was really good that we decided not to do it, because
yeah.
the timing would have been horrific. But they kind of, this was a function of relationship. It's guys that I've cultivated relationships with over the years, to the point where now they're doing something that is really, really cool. And because I know them, I'm able to put some money in.
Let me ask a question I didn't ask, and feel anyone could pipe in, but at the pre-seed level, how much does financials fit in? I think that's something that a lot of entrepreneurs wrestle with at an early stage. Like, from your perspective, do financials matter, or where do you put those in the spectrum of what they need to look like?
It's a really good question. So I think everybody needs to have a financial model. I think every investor looking at the financial model of an early stage company knows that financial model is not going to be followed. But what we're looking at is we're trying to see how a company could be really successful. You know what I mean? And also understanding, we want to make sure that the entrepreneur understands what all the various like things are, like the levers that can be pulled.
Sure.
Turn the thing into a big company, right? It's, hey, we can spend this much money on sales and it's going to turn this into this much money in revenue. And it might not be accurate, right? But it's a model, right, that you can work off of. And then as you get going, you see what the actual numbers are and you change the model, and then you go from there. But so it's you want to have that financial model. Investors understand that it's never going to be exactly what's put there, but they want to see that you've been thinking about what those levers look like, those financial levers look like, to get the company to a level where it makes sense for someone to invest early on.
That's that's very helpful. And I guess another question, where do you see, is it an asset or a liability if a seed founder is talking about how they can exit? I know there's investors kind of vary. Some say you should be so passionate and not focus at all around an exit. Others feel you should be thinking about it and at least taking steps to build towards that North Star. Like, where do you see that in the equation?
I would not mention it.
Okay.
At all. And the funny thing is, I'm actually on the other side of the equation. Like, I actually don't mind seeing it, because as an angel investor, like, I'm not a fund. So I don't need to have like 100 bagger to make my fund.
Mm-hmm.
I get like a 4 or 5 bagger in a company over a couple of years, I'm pretty happy. Like, that's great, So for me, looking at something like that, cool. But I wouldn't touch it. I really would not, because VCs in particular, they want to know that any company they invest in can become a very, very large company, and that the founders of the company don't have their eye on an exit. They're really focused on building something that's going to be a huge company, and then the exit will take care of itself.
Because if you have an eye on an exit, that kind of implies you're not ready to roll up your sleeves for the next 10 years.
Right.
Which is the biggest red flag you could have.
Yep.
Got it. Okay. Anyone else have any other questions?
Yeah, I would have one. Well, thank you very much for saying that. We always get asked this exit question. I'm like always saying, I don't want to talk about exit, I want to talk about, how we're going to develop. But anyway, yeah, my question was, I mean, I'm a first-time startupper, so we made some mistakes in the past. How do you see that when you see a first-time startuppers, they raised their names around, made some mistakes, but still have, a good product? How do you rate that problem?
I don't view it as a problem. I mean, it depends on the level of mistake, but the fact is if you're a first-time entrepreneur, you're going to make mistakes. If you're a second-time, third-time entrepreneur, you're going to make mistakes. So I don't view that as something where, I look at someone, they're like, and say, oh, they made these mistakes, that's horrible. As long as you learn something from it and you own up to it and you own it, I don't see much of a problem.
Well, and there's not a startup with zero issues. Like it wouldn't be a startup if they didn't have issues.
Right. And you'd rather have, talking frank about this than I guess than kind of trying to shovel it under the table.
Yeah, I would never try to shove it under the table. I'd always just be totally upfront about it.
Okay, cool. Thanks.
Who else has a question?
Yeah, Frederick, Foxy Nerds. Other question about safe and convertible notes. As a young company, a lot of us are looking to make safe, and I want to have your angel investors' perspective on that. Do you feel comfortable to make safe with company, or you are looking about more traditional investment?
I prefer convertible, like traditional convertible notes. Safes are fine. Safes seem like they're kind of the typical way people go these days, and that's fine. The funny thing is with companies I've been involved with, we've done a lot of priced rounds, which is unusual these days, I think, especially at the early stage. But I think you're fine with the safe.
Do you have an opinion of either a note or a safe versus a priced round, or are you just looking at the company and it doesn't really matter?
I don't care that much, honestly.
Okay. That's interesting. And are you getting a lot of price rounds, I'm imagining, just because of your deep relationships with other VCs, or?
Yes.
Yeah, that's what makes sense.
Yeah, more often you're going to be seeing safes and whatnot.
Yeah, very cool. Who else has a question for Clark? I got one for you, Clark. What was and you don't have to name the company, but maybe you could talk about it. What was like a bad investment you made where you're like, I learned from that one? Like you must have had one or two that was a mistake.
Yeah, I'm trying to think of how to say that without telling you about like what the company was. I mean, look, I've had a bunch of losses. I've probably had a good 15 go to zero, at this point, maybe 15 to 20. I don't know that I have any real lessons. I wish I did. I don't feel like I do.
So would you say it's 15 reasons that 15 companies went to zero, like just all different, it just didn't align for them? Or was it the typical, they couldn't raise money, they couldn't get customers, or
couldn't raise money, or they got to a point where they raised some money and they just blew through it and they couldn't get product market fit and it just didn't work, and looking at those companies, just looking back at them, I really wish I was able to sit here and say, here are the characteristics of those companies that are different from the ones that really worked out, but I can't sit here and say that I know that.
Wow, that's interesting.
Yeah.
So, and I know you and I spoke a little bit about this, and I honestly can't remember your answer. but kind of two-part question. What's your opinion on international companies? And regardless of your personal opinion, do you have any specific advice for companies that are based outside the US raising capital?
I would get a US presence. Because if you're trying to raise money in the US, I'm actually trying to help a company that's based in India right now raise money, and they're having a hard time in the US because of that fact. So
Yeah.
I would say at the very least, establish a presence in the US.
And the startup that actually asked this question has that presence in the US. How do you feel about a company that's based in the US, but market is international?
I'm okay with it personally, but a lot of firms are not.
And have you done any investments there? Like, have you?
No, this would be the first one, actually.
Oh, interesting.
Yeah.
Can I ask a question when it comes
Sure.
to that? Because is it just kind of an establishment we need to have, or the idea is really to have the IP in the US? I mean, does that make any difference?
I can't say I'm an expert on this, but I think a lot of it just has to do with rule of law. And VCs were being worried about, like, if things go sideways, like what kind of recourse do they have if something is not in the US, right?
Mm-hmm. So it would mean the whole IP actually has to be here.
Again, I can't say I'm an expert on this. I probably shouldn't comment on it because I don't know what I'm talking about when it comes to it. To be honest. Just being totally upfront. Yeah.
Yeah, no, because establishing a Delaware C Corp is done in 2 days, right? But the whole flipping of the IP is just so much more complicated. And I guess that depends again on the country we're currently established in.
Sure.
I think my personal experience and feeling is Facebook was a Florida LLC when they started, and they still got funded, which is not an optimal corporation to be. I think, traction and team is most important. And Clark, tell me if I'm telling a lie. If Uber was a Swedish company and you could have invested, you probably would have made an exception or got schooled up very quickly on them being in Sweden.
Well, I looked at them when they were in the US and I passed, so that was unfortunate.
Okay. Oh. All right. Well, whatever the case may be,
Yeah.
Google or whomever, I think ultimately it comes down to traction and team. And if you have the conviction, you're willing to make exceptions. Would you agree with that, Clark?
Yes. Yep.
And that's the point I was making. So how important IP like patents? Explain that. Why don't patents matter? I see that varies from investor to investor. Some it matters a lot, many it doesn't.
I think it depends on what kind of business you're in, right? I mean, if you're in a if you're in a business where patents matter, like, whether it's like a med tech business or something like that, that may matter. I remember, one of the first companies that I helped start, you guys are going to want to kill me after hearing this, but we were running a lot of pop-up ads. This is back in like 2000, 2001, and somebody else, had a patent on pop-up ads. We just kind of ignored it. Nothing ever came of it. But I think in other areas that I'm not as much of an expert in, I think patents can probably be very important, right? Especially like healthcare, right? For me, patents, more often than not, they're not used, especially if you're dealing with kind of B2B SaaS or consumer related startups.
So
I have a question.
Go ahead, Nick.
Hey, I'm Nick I work here at GSD.
Hey, Nick.
I was just wondering, it seems like do you kind of follow trends and kind of study what's going on and or is it more of like a gut feeling when you're choosing investments? Like, oh, I like this. I know you already said you like teams and you kind of like traction, but do you follow trends as well? Or is this kind of like gut feeling, good team, good traction?
I follow trends, but it's mainly gut feel because I feel like most of the trends, like, for example, I'm just not into I'm not into NFTs. Not that into crypto, unfortunately, I think I'm more about being into boring businesses that I think that have the potential to grow into big businesses. But I do follow trends for sure.
So you could just say skip if you don't want to answer this question, but I'd love to hear if you could say why you passed on Uber.
It seemed like too big of an idea.
Really?
I didn't think he was going to make it happen.
So it was really about the founder and just not, I mean,
yeah,
I don't want you to feel like you're saying.
No, that's it.
Wow. That's so interesting. Was that one where you are you regretful of that, or are you like? I
mean, to a certain extent, of course, but look, if you're in this game, if missing out on things, if your anti-portfolio is really going to bother you, you should not be doing it. Like if that really kills you and it keeps you up at night. I mean, look, so I was in Trade Desk, right?
Yeah.
So Trade Desk is now a $30 billion company. Okay. So I put 100 grand in at a $16 million valuation. Okay. So I sold some of my shares before the IPO, and then I sold the balance after the IPO when I could, right at the point where the qualified small business tax exemption cut in, right? And it proceeded to go up about 10x from there. So I would have had about, I think if I had held all my shares, I would have made about $150 million off of that. Which that can get in your head, and that can destroy you.
Yeah.
If you let it. But the fact is it doesn't for me, because I realized, look, I made what I thought was the right decision at this point. And I think I did. And I made the right decision at this point. And I had no idea it was going to go up to where it went to. And that was that. And God bless Jeff Green, the CEO, for making that happen. And hopefully I'll have another opportunity to see something like that. But again, the point is, like, if that's going to kill you, then I need to be in a different business, because shit like that's going to happen all the time, or businesses you miss out on. Like, I looked at Plaid really early on, super early, passed on that. That's what, a $5, $6, $7 billion, $10 billion company at this point. Honey is another one that I missed out on. So look, if you're doing what I do, you're going to sell early. You're going to miss companies. You're going to invest in companies that go south. You have to look at it like you're playing Monopoly. You really do, because otherwise you'll go crazy. You really will.
And I actually don't know what you're going to say to this, but when you look back at like Plaid and Uber and Honey, I mean, these are, obviously huge companies now. Do they look vastly different in hindsight than any other startup out of the 150 you invested that you've seen?
Nope.
I mean, that's kind of inspiring to me.
I think so. Yeah.
I mean,
I think it's very inspiring. They did not stand out from the crowd.
So Travis was just another entrepreneur with a big idea. Same thing with the guys from Plaid.
Yep. He came down from the Bay Area, met with a bunch of people in LA.
That's right. Travis was living in LA, right?
I think he was in the Bay Area, but he came down here and he was hanging out here for a while. But
yeah.
Well, if they stood out, you would have invested in them, right?
Yeah. I thought it was too big of an idea, which, by the way, if you had fast forwarded 10 years, I would have been all over that because of that reason, right? I just didn't really believe he was going to be able to do it. Not because of him, but just, I was like, this is just such a huge change in how things work. I didn't see it happening.
What round was that? Was that like early or?
Super early.
Wow. Last question, and then we'll let you go. Peter's wondering, so how much of all this is timing, would you say? Are you a big believer in timing, or how do you feel that fits in?
I think timing is a big deal. In terms of investing, or when you're starting companies, or both?
I think both. I mean, mostly.
Yeah. I mean, I think I was really lucky from a timing perspective to be investing in companies in LA when things were really kind of on the upswing. And I think there are a lot of companies that were lucky to be there when there were a lot of VCs coming into the mix, who are looking for companies to invest in. So the timing made a lot of sense there.
Yeah. Hey, well, we really appreciate it.
It's been a lot of fun. No, thank you for having me.
Well, we really respect your time and know it's one of your most valuable resources other than your family and money and your equity. So thank you for chatting with us, and we really appreciate it.
Well, thanks guys for chatting with me. I really appreciate it too. And yeah, if you guys ever want to hook up with me, just talk to Derek, and feel free to reach out to me through Derek.
Awesome. Thank you very much, Clark. Have a great day.
Clark.